So, Namaskaram, ladies and gentlemen. So, we are just moving on to the quick revision of Essay 800 805 for all those students who were attending my live batches last 3 days on our YouTube channel, THARUN'S Brainery YouTube channel, the live session. All the other standards, majority of the important standards for Jan'26 examination is already uploaded there, and this is just standards which were not in that discussion. So, uh, SA 700, SA 800, that is special consideration. So when you are auditing a financial statements prepared in accordance with a special purpose framework, then what are the considerations you need to follow? That is what we are speaking about SA 800. Don't worry, lot of students I know that they lack clarity in what is actually SA 800. They're just memorizing things and they don't know what is the difference between this general purpose financial statement, special purpose financial statement, and in which situations they are used. But the base of the standard is not clear. So that is what we are emphasizing today more, like the core concept regarding SA 800. Once that is set, if your articleship was decent, then you will understand everything. So SA 800, this is just a concept sheet. So special consideration, audit of financial statements prepared in accordance with special purpose framework. So first of all, basically two types of financial statements are there. So first, like accordance to SA 800, like we are only dealing with that. So types of financial statements, one is what we call a general purpose financial statements. So this one financial statement is applicable, like whatever financial statement which you are normally seeing. That is what we call a general purpose financial statement, normal format, normal financial reporting framework, which you are seeing. Yeah. So this is a common financial statement, and companies general purpose financial statement. If it's a company, then obviously mandatorily audit will be there for the general purpose financial statement. Then the financial reporting framework in the general purpose financial statement will be general purpose financial general purpose framework, normal framework which we know. Just understand this much. So that is general purpose framework means a framework to meet the common financial information needs of wide range of users, large range of users. This one to meet the financial information need of common audience. That is what we call general purpose financial reporting framework. Okay. Now we are focusing on special purpose financial statements. So these are financial statements that are prepared for some special purposes. The general purpose, it is prepared for normal, like common. In a year once we will prepare and do the audit and everything. But these are certain financial statements. These are prepared in addition to general purpose. So yearly, normally one general purpose financial statement is made. In addition to that, for some special purposes, we are making this one financial statement. And let's look at what are those purposes. Some purposes we'll look at here. So these are prepared by the management for the specific users. For some specific users, some specific users are there of the company who are users, people who uses company or financial statements. Normal financial statements are used by us like public, government, creditors, bank, and all these people. But these special purpose financial statements, these are not commonly used by everyone. No, some people may require this just for that one people, some category of people. The company is making this and giving just to them. It is not publicly given or something. No. So these are prepared by the management for specific users, for some specific purposes. Okay. So if the intended users means whom, for whom we are making these financial statements. If the intended users wants an audited special purpose financial statement, obviously then we'll ask the auditor to do the audit. Okay. Then example, financial statements prepared for creditors. Sometimes I'm a company and my creditors are saying, sir, I need your financial statement. So we gave our normal financial statement. So they are saying, no, not this. I want your special purpose financial statement. That is, I want this normal financial statement you are made on accrual basis of accounting. I want you to make a financial statement with a cash basis of accounting and give it to me. Creditor will say that. Like. So the entire format of the accounting changes, financial statement changes. Special purpose financial reporting framework comes there. So that is one example. Second, financial statement prepared to meet the regulatory requirements of regulator. Example, SEBI, RBI, all these people, all these bodies, even though we are giving them our normal financial statements, but they are saying based on their format, based on their requirement, based on their reporting framework, they have some certain criteria. Based on that, we also need to make one more financial statement, that is special purpose financial statement. So the reporting framework changed there again. So that is based on their framework. Then comes financial statement prepared as per the provisions of a contract. Contract, example, see, bank loan agreement or a franchisee agreement. These are just one or two examples. So, bank loan means company has taken a bank loan from a bank, obviously from a bank. Company has taken a loan from a bank. So bank will say, rather than giving me your general purpose, that obviously we'll give. Along with that, I want you to give a special purpose financial statement. Bank will ask you, and bank will prescribe some format. So basically, you are having a contract with the bank. So based on that contract, some provisions bank will be saying that based on the provisions of a contract, bank will ask, okay, prepare your financial statement in this kind of a framework and give it to me. So whatever that requirement is, it will be mentioned in the provisions of this contract. Okay. Then, or franchisee agreement. Imagine there is a company, Domino's. Domino's parent company is there. But Domino's other franchises would have been taken by some other people. So there also the special purpose financial statements may be asked by them. So these are just examples. So this is just a concept sheet to make you understand what things are. Then we'll forward to whatever is there in your material. Because ICA is, even though SA 800 ICA is not going very deep in questions, till now they have not gone, but we don't know what's going to come in the future. So like if you have watched my live revisions, we have gone in depth in the important standards plus the questions, everything. Then comes the, and SA 810 was already asked in the previous attempt. That is why we are keeping a bit less emphasis compared to 800 and 805, but it's not 100% sure whether it will come or not. Then comes audit of special purpose framework, special purpose financial statements. How the auditing aspect of that. See, the audit normally it is done by a CA in practice, appointed by the company. Simple. Then audit is similar to the audit of a statutory audit, like statutory audit is similar. Then, like all the relevant essays which are there, mostly they will be also applied in audit of special purpose financial statements. Then all the process like the risk assessment, testing, everything may be the same. Then comes the difference. What is the difference between an audit of a general purpose financial statement, like a normal stat audit which you see, and what is the difference, like, and the audit of a special purpose financial statement? What is the difference? See, a change in the framework. General purpose was based on general purpose framework, but this is on special purpose framework. So framework is changed. That is, so framework of special purpose financial statement is cash basis, regulatory basis, or can be contractual basis. Then there may be change in the wordings of the report. The report when it is made by the auditor, and the wordings may change compared to general purpose and special purpose audit report. Then restriction on use. General purpose financial statement is meant for all the public, or like all the users. Many users are there: public, a government, a bank, a creditors, anything. But special purpose is only for certain intended users, those financial statements. So this is just the basic, and then we'll go to the directly learn from the material. All this material is available in my Telegram channel. The link will be down in the description. CA Sudarsan, if you type, you'll get it. Entire CA final standards material is there. Whatever revision material we have taken, everything is there. Please go and take it. And if Caro is one difficult subject for you, difficult topic for you, last day in our last day 3 live revision of standards, last portion, we have created a mnemonic and discussed in depth Caro, like not in depth, how to memorize Caro. Please go and watch that. So SA 800, general purpose general purpose framework, financial reporting framework to meet the common financial information needs a wide range of uses. Special purposes for specific uses. Whatever example I said, same thing. Then considerations when accepting such an engagement. That is, guys, understand. Because I know this one topic, maybe because of the language used by ICA, may be a bit technical for you. So I've written inside of this note like simple meaning of everything so that you can easily understand and use it. So before, I am an auditor and company is calling me to do the audit of a special purpose financial statement. Before doing that audit, I have to do certain things. That is consideration when accepting that work, accepting that engagement. What is a consideration? Before starting the audit, I should check whether the financial reporting framework, that is a special reporting framework that the management has used in preparing that special purpose financial statement, is that framework actually acceptable or not? That is, whatever framework management has used to prepare a special purpose financial statement, is that framework, whatever the financial reporting framework they have used for that, is it actually good? Is it actually an acceptable framework? If it is an acceptable framework, then only do the audit. If it is not an acceptable framework, don't do the audit. Simple as that. So, okay. So, auditor will accept the engagement only if the reporting framework used by the entity for preparing the SPFS is acceptable. Then, for checking its acceptability, many things are there. See, first we'll look at what are the information needs of the intended users. We are making special purpose financial statements for someone. What is their information need from that statement? We are making and giving it to them. Okay, what are they focusing more on that? So what is their financial information needs? That is a one factor which we will consider when determining the financial reporting framework. Is it acceptable or not? Then financial reporting framework, three things are there. If the financial reporting framework, the financial standards, the standards inside the financial reporting framework, if those are specified by a authorized organization, an organization which is authorized to generate standards, which has power to make the standards, if the reporting framework contains those kinds of standards, then obviously it is deemed as an acceptable framework. Simple as you see. If the financial reporting framework is made by an authorized organization like some ICA, then it is deemed as acceptable because they have the power. Authorized organization means authorized organization to issue standards. See, now let's look at ICA's language. Financial reporting standards established by an organization that is authorized, that is established by an authorized organization to promulgate standards for SPFS. Those standards will be presumed acceptable if organization has an established and transparent process. So simple meaning is this one. What is the standards inside the financial reporting framework? Are those standards prescribed by an authorized organization? Then it is acceptable. Only thing is this their process should be established and transparent process. Simple. Then comes sometimes some law or regulation will prescribe some financial reporting framework. If management is using that framework, obviously it is acceptable because it is prescribed by law. So first is, what is the framework used by management? Whether the financial reporting standards, everything inside that framework is given by a authorized authority, then it is acceptable. Second case, if the reporting framework management is using is prescribed by a law or regulation, then it is acceptable. Then comes the third. That is, if any reporting framework is prescribed by a contract, me and bank is having a contract. So bank asked me, like I have taken a loan from a bank. So bank asked me to prepare financial statements in a particular format. So that's based on a contract. Me and bank is having a contract. So based on the provisions of the contract, bank is asking me to prepare a special purpose financial statements. So in that case, in this case, if any financial reporting framework is prescribed by a contract is say in this format, then it is acceptable. That financial reporting framework is acceptable if financial reporting framework attributes, that is, that reporting framework will have inside attributes format and all the attributes inside that. Those attributes of that specified framework by contract is almost equal to the attributes of a general purpose financial reporting framework as per SA 210. That is, if it is based on a provisions of contract, the attributes specified by that provision of contract for the financial reporting framework, if the attribute of that financial special purpose financial reporting framework or attribute, if it is equal to attribute of a normal financial reporting framework as per SA 210, then it is acceptable. Three cases. Hope you're done. Simple meaning understand and keep in mind. Okay. Then comes considerations when planning and performing audit. These are things, consideration when you accept the engagement. Auditor point of view, he is before accepting the engagement, he has to have this consideration. He has to consider these 3-4 things before accepting the work. So now he accepted the work, checked all these things and accepted the work. So now he wanted to plan and perform the audit. What are the things he will consider when he is planning and performing the audit? I hope you are having the structure, proper concept built in your mind and properly structured line by line. I'm hoping it is clear. Yeah. 1 second. My throat is severely having an issue. Yeah, considerations when planning and performing such audit. Yeah. Normally, SA 200, as per SA 200, you have to consider all the relevant standards which are applicable. Like you are doing the audit as audit of a special purpose financial statement. When you're doing the audit, all the standards which are actually applicable for that audit, use it. Simple. SA 200 require the auditor to comply with all the ethical requirements of independence. Now let me tell you, You are a chartered accountant and you are doing the audit. If you are auditing a general purpose financial statement, you will be independent. You will follow all the ethical requirements, stat audit. Same things you have to follow here also. Independence, ethical requirements, etc. Plus, whatever standards which you will be normally using in a general purpose statement or financial statements audit, same standards you can use it on here also. Process, everything is the same. Just a reporting framework changed and some reports in the audit report, some changes also there. Simple. Then, application of some of the requirements of essays in the audit of SPFS. That is, normally all the other essays which are using in normal audit is applicable here. But this ICA has given certain 3-4 essays specifically they have mentioned. All the others are also applicable. These are just simple for your consideration they are saying. Number one is essay 320, materiality. Normally, in audit of general purpose financial statements, when you are determining materiality, what is materiality? Materiality means a level above which the user's decision get affected. If any misstatement is above that level, it is assumed that the user's decision gets affected, right? So when you are determining materiality in general purpose financial statements audit, what are you considering? Okay, what are the users? What like judgment about the matters that are material to the common financial information needs of the users as a group? The general users, what you'll be considering the general users sort of financial information needs, and you will make materiality in general purpose financial statements audit. Similarly, when you are auditing special purpose financial statements, also you have to consider materiality. That time you will consider the needs of the specific users. Bank asked you to prepare SPFS. So at that time, consider bank order need, bank order financial information need, and determine materiality. But general purpose financial statement is made for the general, like applicable for all common people, bank, everyone, like tax government and so there you will consider the financial report, the financial info needs of them. But when you're auditing SPFS, consider the financial information needs of intended users for whom you are making it. Then determine the materiality. Then in essay 315, when you're obtaining an understanding of the entity and its environment, in normal audit, you'll understand entity, selection and application of accounting principles. But when you're auditing SPFS, you have to obtain an understanding of any significant interpretations of contract. That is, yes, as per essay 315, it requires the auditor to obtain an understanding of application of accounting policies, just like normal audit. Then here, if in SPFS you are preparing financial statement based on the provisions of a contract, then you have to also obtain an understanding. As per essay 315, you also have to obtain an understanding about the interpretations of the contract, significant interpretations. Inside that contract, lot of significant interpretations will be there. You have to obtain an understanding of those interpretations that management has made in preparing the financial statements. Contract will be there. Me and bank has a contract. Then based on that contract, management will make the interpretations and management will make the SPFS. So you have to obtain an understanding of the interpretations made by the management when they are preparing financial statements in SPFS. Got it? Crystal clear? Done. Then SPFS prepared as per the requirements of a contract may agree with the intended users on threshold below which is simple. Then like when you are normal SPFS, when it is prepared as per the requirements of a contract, I'll do everything line by line so it is easy for you. For SPFS prepared as per the requirements of a contract, management may agree with the intended users that they'll set a level. The management will say to the intended users, bro, this is a level. All the misstatements below this level, please don't consider it as a significant, like small level. Like they'll set a threshold below which misstatements identified during audit will not be corrected or adjusted. They'll say like that to the intended users. They'll agree with the intended users. But management may agree this with the intended users, but that is between management and users. But auditor is a separate person. So, but when we are auditing, we don't have to consider what management and users has agreed. No, we have to do our audit normally. So, the existence of this kinds of a threshold does not relieve the auditor from determining a materiality. Management has told to the users, like, bro, this is a threshold below which please don't, I'll not correct any misstatement, something like that. But auditor, when not doing the audit, he does not have to consider that. He has to do the materiality normal way. That doesn't relieve auditor from his responsibility. Then essay 260 require the auditor to determine the appropriate person. That is, in 260 we know you have to communicate with the TCWG. Same here also. When you're auditing SPFS, determine which TCWG you have to communicate. Simple. The only thing which you have to keep in mind is that sometimes if a company obviously will prepare a GF, general purpose financial statements, and company in this case may prepare a special purpose financial statements also. But what is TCWG's duty? To oversee the preparation of financial statements. So the TCWG that is overseeing the preparation of general purpose financial statement may be different from the TCWG who is overseeing special purpose financial statements. Imagine a company has a lot of 10, some 5, 10 TCWG or something. Just see. This is general purpose financial statement. This is special purpose financial statement. This is TCWG. The TCWG who is overseeing this preparation of this and the TCWG who is overseeing the preparation of this sometimes may be different. So you have to consider that accordingly and then determine whom to communicate. When you are preparing general purpose financial statements, you would have communicated to some TCWG. But when preparing SPFS, sometimes the TCWG may be different. Find the appropriate person to whom you have to communicate. Simple. See, SA 260 require the auditor to determine the appropriate person within the entity's TCWG with whom to communicate. Find the right person to communicate. In some cases, all TCWG may be involved in managing the entity. In that case, you have to change the modified, like application of the communication requirement is modified in that case. Then, when a complete set of GPFS is prepared by the entity, those people who are responsible for oversight of SPFS may not be the same. That is what I told here. In that case, find the right person to communicate. Simple. When forming an opinion, you have to consider SA 700. So for SA, like 320, 260, 315, 700. Like just specific considerations they have given. Then, description of the financial reporting framework. In audit report, how things are going to come. 1 second. Description of the financial reporting framework. SA 700 requires the auditor to evaluate whether financial statement has adequately describe the financial reporting framework. Very easy. If financial statement is prepared as per the provisions of a contract, contracted basis you are preparing financial statements, evaluate whether the financial statement describe any significant interpretations of the contract. Simple. Then, in case of audit report, this is important. In case of audit report on SPFS, you are auditing SPFS and now you are making an audit report. What are the things you need to consider? Simple. Audit report shall describe the purpose for which such a financial statements are prepared, and if necessary you have to mention the intended users also, or refer to a note in the SPFS that contain that info. Sometimes in SPFS, inside the SPFS financial statement, some note will be there. Inside that note, these informations may be given. So in your audit report, give a reference to that. That's one option. Second, when you are doing the audit, normal audit report, when you are making SPFS audit report, you have to describe inside the audit report why this SPFS was made, what is the purpose behind this, and sometimes the intended users also have to make, or you can give a reference to a note in the financial statement where it is these both things are described. If it is, then management has if management has a choice of preparing financial reporting framework, if management has a choice which financial reporting framework choose, if management has a choice, then the explanation of management's responsibility for financial statements, management responsibility for financial statement section, in that the explanation of management responsibility, you have to refer to responsibility for determining whether the financial reporting framework is acceptable or not. Inside the responsibility section, you have to determine this responsibility also, that is what is the responsibility for determining the whether reporting framework is acceptable or not. Then when key audit matters are communicated, refer to like you have to follow SA 701 applies consistently. Simple. Then as per SA 720, other information, reports accompanying SPFS. SPFS is there. If there are any reports that are accompanying SPFS, the purpose of this report is to provide the users with information on matters presented in SPFS. SPFS is there, plus some reports along are also with there. The purpose of this report is to give information to the users about some matters inside this SPFS. Some matters will be there inside of SPFS. This report will give extra information about that. If it is like that, then as per SA 720, then these kinds of reports are also considered as annual reports for the purposes of SA 720. The reports accompanying SPFS, they are considered as annual reports for the purpose of SA 720. Then auditor may refer, this is super. Auditor, like general purpose financial statements is there, special purpose financial statement is there. General purpose financial statements audit has an audit report for this, and SPFS audit is also done. It also has an audit report here. So 2 audit reports are there. So in this audit report, you can give a reference to any matter described in this audit report. Example, in general purpose financial statements, when you are doing the audit, you would have mentioned like a material uncertainty related to going concern. About that, you would have mentioned in the audit report of general purpose financial statements. So when you are preparing the audit report of special purpose financial statements, you can give a reference to this. Like this reference to the audit, the written by the auditor here. Like in SPFS, you can give a reference to that material uncertainty paragraph in general purpose audit report. That is this one. Auditor may refer in other matter paragraph section of SPFS to the auditor's report on the complete set of GPFS to any matter reported therein as per SA 706. This is 706 reference, other matter paragraph. Then alerting the readers that the financial statements are prepared as per SPF. Because there is a problem, guys. SPFS is prepared for some specific users only, intended users. Only it is for them. It is not for the public or any other person. If some other person who don't know this, he may take it and see that our company is superb. Like sometimes SPFs would have been made in cash basis of accounting. When some other user sees that, oh, cash basis of, he don't know whether it is cash basis or something. He may not read detail. He'll see this much profit. Okay, buy. I'm going to buy the company or something, or I'm going to sell the company, share something. Anything can happen. So, but actually accrual basis is complete. That is the original thing. This is just a SPFS. So this SPFS is only intended for certain people and they should only use it. So auditor will make sure they will only use it. And how can auditor do that? He need to alert the readers that the financial statements are prepared as per SPFS. Whoever is using that financial statement, SPFS, or whoever is using the SPFS audit report, he will alert them. Bro, this is a financial statement prepared as per SPFSF. Please don't use it. It is only for those people. So how will he do that? SPFs may be used for purposes other than the purposes for which they were intended. Sometimes they may do that. So, for example, a regulator may require like these things. So to avoid these misunderstandings, auditor will alert the users of audit report by including an emphasis of matter paragraph explaining that the financial statements are prepared as per SPF. This note is there on my Telegram channel. Please go and take it. And please be joined there. Lot of revision videos, free notes, everything I'll upload. And therefore may not be suitable for other purpose. He can use an emphasis of matter, simple. Then restriction on distribution or use. SPFS financial statements and its audit report, it should be the distribution of that or usage of that should be restricted. Only those intended users can use that. So how it is done, that restriction? In addition to alerting the users, here we are just alerting. Here we are restricting the use. In addition to the alert discussed above, auditor may indicate that audit report is intended solely means intended only for the specific uses. Auditor has to mention that it's only intended for this people. So thereby you are restricting the distribution or use of it. Then depending on law or regulation, sometimes this may be achieved through restricting the distribution of use. Then in these circumstances, a paragraph will be there alerting the readers may be expanded to include these matters. Example, like in your emphasis of matter, see, we draw attention to the note text in the financial statements which describe a basis of accounting. Financial statements are prepared to assist the company and it may not be suitable for all the purposes. Intended only for the company and DEF company, something like that, should not be distributed or used by other parties. So this is what SA 805 is all about. Special purpose financial statements and its audit considerations. Hope you got good clarity on this, and notes is also available. Now take it, understand it first, then memorize. Like you have seen in the top, audit clarity. First understand, then memorize. Because in inter, you can at least pass with memorization. Final is a whole together a different game. Understand, get clarity, then memorize. Okay. Yeah, so SA 805, that is special considerations in audit of SFS and SCFS. It simply means SFS means single financial statements. Single financial statements. And SCFS means specific elements in a financial statement. So what do you mean by single financial statement? Single financial statement means normally till now we were talking about audit of complete set of financial statement. That is P&L, balance sheet, all the notes, all the things, everything, like complete set of financial statements we are talking about. But right now we are focusing only on SFS. That is, sometimes the auditor will only audit just the P&L or just the cash flow statement. Or sometimes that is what we call the P&L or cash flow. That is, any single part of a financial statement is what we call a single financial statement. That is, you are auditing just the P&L or just the cash flow statements. So these things are what we call auditing as single financial statements. Then what do you mean by auditing an element of a financial statement? Elements means what are things inside the financial statements. Sometimes the auditor may be only auditing trade receivables, or only he may be auditing PPE, or only he may be auditing some specific liability or anything like that. So these are auditing specific elements or accounts or some items in the financial statements. So what you have to understand is, what is a single financial statement? I told you. What is the elements of financial statements? Also, I told you. So till now we were talking about auditing the complete set of financial statements. But when an auditor is hired to only audit a single financial statement or a single element of a financial statement, then SA 805 comes into picture. So SA 805 has the provisions, has the considerations regarding what to do in these cases. And one thing you have to remember in mind, that is SA 805, it does not apply to the report of a component auditor. You may be hiring a component auditor, like imagine there's a holding company, principal auditor is there, but component auditor is also there. So principal auditor told the component auditor, do these kinds of procedures and give me the report. So component auditor may give a report to the principal auditor. But that report, SA 805, is not applicable to that report given by a component auditor. So SA 805 does not apply to the report of a component auditor issued as a result of work performed of a financial information of a component at the request of a principal auditor for the purposes of audit of CFS. Okay. Yeah. So now, and one more thing. So when you are actually auditing a financial statement, sorry, when you are actually auditing a single financial statement, P&L or cash flow or something, or when you are auditing a specific element of a financial statement, that you are just trade receivable or anything, you have to audit the related notes and all the disclosures, everything related to that particular item. When you're auditing trade receivable, audit the disclosures and notes related to trade receivable also. Keep that in mind. Then what are the considerations when accepting such an engagement? Before accepting an engagement to audit SFS or SCFS, there are certain things which you needed to consider, and that is what we call considerations when accepting such an engagement. So what are the considerations? As application of standards, you have to check the application of standards. SA 200 require the auditor to comply with all the essays relevant to audit. I'll read everything line by line and I'll explain to you so that nothing is missed. So, SA 200 require the auditor to comply with all relevant essays to the audit, just like in SA 800. Here also, when you are doing the audit, you have to comply with all the other relevant essays what are needed for the audit. Okay. So, sometimes you may be hired to do the audit of complete set of financial statements, and at the same time you may be also hired to check they may also ask you to do the audit of sometimes an SFS or an SCFS. So in that case in that case uh, whatever evidence you are getting from auditing complete set of financial statements, those evidence you can use it on when you are auditing single financial statements also. So keep just this thing in in your mind. When you're auditing both these things in conjunction, you can use whatever evidence you get from audit of complete financial statements. Same audit evidence you can use for the same things in single financial statement if it is applicable. Then, if both are audited by a different auditors, that is, if auditor is not engaged to audit complete set of financial statements, auditor audit doing that and auditor doing SCFS and SFS is different. In that case, bro, just understand, you are not auditing the entire set of financial statement. You are just auditing trade receivable. Practically, how can you implement all the essays or something relevant? No, because trade receivable may have interlinking to other elements in financial statements. You may not be able to get all the audit evidences or everything. No, you are just auditing trade receivable. And where does trade receivable comes from? Sales. So trade receivable is related to sales and sometimes to cash. All these things are related. So, but when you're just auditing trade receivable, you may not be able for you to apply all the essays or relevant essays or something. So when the auditor is different, then auditor has to determine whether audit of SFS or SCFS is in accordance with SA is practicable. That is, auditing trade receivable with the whatever relevant SA is applicable for trade receivable, is it practical or not? Because it is linked to some other elements also. Okay, so keep that thing in mind. Then one more thing, compliance with the essays relevant to the audit of SFS or SCFS may not be practicable when the auditor is not also engaged in auditing the complete set. Simple thing, same thing. When you are just auditing SFS or SCFS, sometimes it may be hard for you to comply with the applicability of all relevant essays because you are not auditing complete set. So in these kinds of cases, auditor does not have the same understanding of the entity and its environment, because when you're doing the main audit, you understand the entity environment, do the detailed procedures, you get lot of audit evidences, you understand the company, everything so much. But when you're just auditing this one particular thing only, you may not get that much evidence, right? Because the scope is limited. Yeah. Then auditor, one second, my throat is auditor, sorry, auditor also does not have audit evidence about the general quality of the accounting records also, because you are not auditing everything stuff. So you may not have the audit evidence about the quality of accounting records also, or other accounting information that would be acquired in audit of entities complete set of financial statements. Okay, whatever, like when you're auditing complete set, whatever evidence you get, same thing you may not get when you're auditing SFS or SAFS. That's the same thing mentioned here. He may further need to get some other evidence to corroborate the audit evidence acquired from the accounting records when he's just auditing SFS or SAFS. In audit of SFS or SAFS, certain essays require audit work that may be disproportionate to the element being audited. That too we have to keep in mind. So if auditor concludes that whether the audit of SFS or SAFS are as per essay may not be practicable. He's saying company hired him to audit the SFS or CFS. But when he observed, he understood, okay, auditing that with practically with the complying with essay is not possible. He understood that. Then auditor may discuss with the management whether any other type of engagement might be more practicable. Rather than this auditing as per essay 805, can you give me some other engagement other than this? Because it is hard to do that, because I cannot follow the standards on auditing in this case. So if auditor is unable to follow standards on auditing when he's going to audit SFS or CFS, tell the management, bro, it is not practical. Can you give me some other kinds of engagement? Whether any other kinds of engagement will be practical in that situation. And also two things we missed. This one, same thing which you learned in above. SA 200 require the auditor to comply with relevant ethical requirements and all the essays relevant to audit. Simple. Then applicability of the financial reporting framework. Applicability similar to what we learned in SA 800. Here also 4 points are there regarding applicability. Same things, guys. What is that? Like SA 210 require the auditor to determine the acceptability of financial reporting framework. Same thing there. Then you in audit of SFS or CFS, consider whether application of FRF will provide adequate disclosure to enable the intended users to understand the financial statements അതോടെ affected transactions എല്ലാം, whether the whatever SFS you are auditing, whether it is as per the financial reporting framework, proper applicable financial reporting framework, it is there or not. Simple. Then SFS may be prepared in accordance with the standards established by recognized standard setting authority. Same thing what we learned in SA 800. Then comes the considerations when planning and performing the audit. So here we learned about considerations when accepting an engagement. Before accepting engagement, these are the things you have to keep in mind. Then here you already accepted the engagement and now you are going to audit. So before planning and performing the audit, what are the things you need to consider? Auditor shall adapt all these. Like now you are going to do the audit. So adapt all the essays that are required to do the audit. Same thing what we learned in SA 800. Even though you are not auditing the complete set financial statements, still you have to follow all the relevant essays that are required to do the audit. Then there we learned in SA 800 there are certain other essays which you need to, like they have specifically mentioned a certain essays like 320 315 everything. Here also they have mentioned when you are auditing SCFS, standards such as 240 550 570 etc are basically relevant. This is because element could be misstated as a result of fraud and all these things. Simple. Then SA 260 we learned there in SA 800 communication with the TCWG. So here also when you are auditing as per SA 805, so you have to follow SA 260 when for communicating with the TCWG to find the appropriate person in TCWG to communicate, to whom to communicate. Yarkitta communicate panana, find that appropriate person. 260. Then when this one is also same what we learned there. Here this is also same what we learned there. Then comes the evidence. Evidence I told you earlier. That is when you are auditing. Imagine same auditor is auditing general purpose, not general purpose. Same auditor is auditing complete set of financial statements and this one also. What is SFS or SCFS? Same auditor is doing both. So whatever evidence you got from this general purpose, I mean the complete set of financial statements, same thing you can audit evidence. Same thing you can use it here also for the single financial statements or particular element of financial statement evidence. Then comes the interrelated. Interrelated means even though you are auditing, just imagine trade receivable only you are auditing. Bro, it is related to debtor, it is related to sales. I mean, it is related to sales, it is related to cash. So there may be many items inside the entire financial statements which these item particular element may be related to. Right? So that is what we call interrelation. So imagine you are hired just to audit a trade receivable. you cannot just blindly audit trade receivable and go. No, to audit trade receivables, there are certain interrelated things also which you need to consider, right? Like sales, cash, or some other area wherever it is related. That is what is meant by interrelation. Individual financial statement that comprise a complete set of that is in complete set of financial statements, and many elements of those financial statements, including the related notes, everything are interrelated. Items in financial statements, individual statements, items plus complete statements, everything are related, interrelated. Accordingly, when auditing an SFS or SCFS, when you're doing the audit of this, auditor may not be able to consider the financial statements or the element in isolation. You may not be able to consider that in isolation. Like, you just cannot sit and audit trade receivable alone. No. Auditing trade receivable, it has interrelation with other things. Hence, auditor may need to perform procedures in relation to the interrelated items also to meet the objectives of audit. When you're auditing trade receivables, interrelated items also you have to check. Simple. Then materiality. Bro, materiality, when we are taking the entire financial statements as a whole, whatever materiality we are determining, that materiality, and when we are just auditing an SFS or SCFS, the materiality we determine for this audit will be very lesser than, not very lesser, will be lesser than the materiality level for the complete set of financials, because this is completely huge thing. This is just a part of it. So the materiality we determine for the complete set of financial statements will be lesser than the materiality, will be more than the materiality we determine for SFS or, that is SFS or SCFS, or materiality will be lower. Simple. Materiality determined for SFS or SCFS is lower than the materiality determined for a complete set of financial statements. Simple. So this may result in more audit procedures being required. Like, since the materiality is low, chinna items will pop up, so you have to do the deeper audit procedures, everything. So also consider whether SFS or SCFS is presented with the proper disclosures or not. Yeah, form of opinion. So SA 200 states that when you agree the terms of audit engagement, you have to include any expected form of reports. Any expected form of reports, anything is there, it will be obviously included in the agreed terms of engagement. Simple. Then, in case of SFS, in case of audit of SFS or SCFS, consider whether the opinion is a form of opinion is appropriate. Simple. Then, in case of SFS or SCFS, sometimes, in case, like, you are, imagine, I'll say this sentence first. In case of audit of SFS, in case of preparation of SFS or SCFS, you may be, not you, the management may be using a financial reporting framework. That reporting framework is actually a framework which is created by a standard setting body, like this senior bodies. They authorize a standard setting body. They created that framework for complete set of financial statements. That is a framework which is actually created for a complete set of financial statements. When you are using that framework to prepare SFS or SCFS, when company is using that framework to prepare SFS or SCFS, so inside that framework is actually prepared for complete set of financial statements. They are using it now for presenting SFS or SCFS. So in those cases, in those framework, that framework may not explicitly address the presentation of the SFS or SCFS. That is actually made for complete set of financial statements. So that framework may not show how to present it. They may not, that framework may not show how to present the SCFS or SFS, because it is actually made for a complete set of financial statements. That will not show. SFS, SCFS present separate, it will not show. They will not explicitly separately, it will not show. So, but actually, company is using that for preparing SFS and SCFS. So, in that case, what should the auditor do? He should, so the auditor should consider whether the expected form of opinion is appropriate in the light of financial reporting framework. Compared to financial reporting framework, whether his expected form of opinion is appropriate. Simple. Then comes this one. This one is in opinion paragraph, in auditor's opinion. In auditor's opinion, can he include this phrases, that is present fairly in all material respects? Present fairly in all material respects, or give a true and fair way. Can he include any of these two words, these two phrases in auditor opinion? Can he include that? That is the question here. So you have to consider these factors, because this comes under the fair presentation framework. And there is some other framework called the compliance framework, right? I'm hoping you know what is fair presentation, what is compliance framework. Just means fair presentation framework means it's a kind of a flexible framework, you can say. Like, you can add extra disclosures. You can sometimes, if you want, you can depart from the requirements of the standard, something in rare circumstances. That is fair presentation framework. That is if you want to give some extra presentation for some extra disclosures, etc., is allowed. Like whatever is there in the financial reporting framework, you have to follow that, but if needed, you can just take a flexible stand. But there is some next framework is so in the fair presentation framework, if you are using fair presentation framework, then this sentence comes in the audit opinion. You can use this sentence: present fairly in all material respects. Like not in all material respects, we are not directly saying here. Present fairly in all material respects, or it gives a true and financial statements gives a true and fair view. Diplomatic, a flexible, you can say. But when it comes to compliance framework, you have to comply exactly how the framework is saying. Whatever the framework is saying, you have to comply to that framework. So there we cannot use these two sentences. That is, financial statements comply in all material respects. That is how we go on that. So like this, present fairly will not come in compliance framework. Okay. So now the question is, can you use these two phrases in auditor's opinion? Basically, fair presentation madri, can we use it? So for that, you have to first check whether the financial reporting framework is restricted to the preparation of complete set of financial statements. That is a reporting framework you are using, whether it is implicitly, explicitly, or anyway, is it restricted to the preparation of complete set of financial statements? Then whether SFS or SCFS, whether the SFS or SCFS will, that is whether the SFS or SCFS will comply fully with the requirements of the framework, including disclosures and all. That is, if something is complying fully with the framework, pakka, rigid, if it is complying, it is compliance framework. Compliance framework, this two will not come. This two comes in fair presentation framework. So if your SFS or SFS is complying fully with the requirements of the framework, that is the single financial statements, and the element is complying almost like 100%, complying fully with the requirements of the framework, then it comes under like basically kind of a compliance framework. So this, you cannot use it. But if you want to, like if it's in the base of a fair presentation to get if it's necessary to achieve a fair presentation, then that is fair presentation means you can provide some extra disclosures which is beyond the what is actually required by the framework, or like I said to you, this is fair presentation. Or sometimes in some exceptional circumstances you can depart from the requirement. If it is coming under this, then basically you can use this. So understand that, simple. Then auditor decision as to the expected form of opinion is properly a matter of professional judgment. Then in forming an opinion and reporting considerations in an audit of SFS or CFS, so basically you have to whenever you are forming an opinion, you have to consider all of these things, like basically SA 700, adequate disclosure, going concern, whatever it is, in key audit matter, other information, these things, whatever we learned earlier, similar to that, just simple read. Then this one is signature of auditor. That is, auditor, when he is signing the audit report shall be signed by the auditor in his personal name. He has to sign. When a firm is appointed, then in the personal name and auditor, and in the name of the firm name also he has to sign. Then he has to mention the membership number and the firm registration number, simple inter-level topics. So then now comes some important part. That is, if auditor, please wait, like you have to be focused. If auditor undertakes an engagement to report on SFS or SCFS in conjunction with an audit of complete set of financial statements, he is doing both. Auditor has to express a separate opinion for each engagement. I'm an auditor. I am auditing the complete set of financial statements. At the same time, I'm auditing SFS or SCFS. I'm the one who is auditing both. I have to issue separate opinion for each of these, because both of these are separate kind of separate engagements. So when I'm auditing this, I have to issue a separate opinion for this, and when I'm auditing this SFS or SCFS, I have to issue a separate opinion for this. Rendukum separate opinion venam. But there is a catch in this. See, audited SFS or SCFS may be published together. Separate opinion, both of them separate opinion, but you can publish it together. Until a separate opinion, which is certainly you can publish it together. But opinion should be separate. With entities audited complete set of financial statement. That is, audited SFS, SCFS is here. Audited CF, like complete set of financial statements is here. Random separate opinion is there. But when you are publishing it, you can publish it together. Okay, no problem. But if auditor conclude that the presentation of SFS or SCFS, presentation does not differentiate it sufficiently from the complete set of financial statements. Presentation, SFS, SCFS or presentation is not different from this one, complete set of financial statements. He has to ask a management, bro, Please rectify the situation. Please rectify the situation. Ask the management that. Then, auditor shall also differentiate the opinion on both of them from the opinion on complete set of financial statements. That is, your opinion in both should be completely like separate opinion, madam. That's it. Then, auditor shall not issue audit report containing an opinion on SFS or CFS until satisfied with this differentiation. Okay. Then, if audit report on an entity or a complete set of financial statement includes, that is, audit report on complete set of financial statements. Full set of audit report, if it includes a modified opinion or emphasis of matter paragraph or other matter paragraph or any material uncertainty or any statement that describes an uncorrected material misstatement or of other than fast process 720, then if any of this is included in the entity's complete set of financial statements or audit report, complete set of audit report auditor shall consider the implication of these matters in the matters or implication. Consider the implication of these matters on audit of SFS or CFS and audit report. That is audit report of main complete set of financial statements or audit report. Inside this, we have some modified opinion or emphasis of matter paragraph, other matter paragraph, material uncertainty. Any issue is there inside the audit report of this. Then complete set of financial statements or audit report, it is these problems, these matters are there. Then you have to consider the implication of the matters in the audit report of SFS or SCFS. இங்க இருக்கிற மேட்டர்ஸோட இஷ்யூ அதோட implication if see whether if it is there in the audit report of SFS or SCFS. See, that is implication of the matters included, implication of the matters or implication included in the complete set of financial statements or report. That is இதுக்குள்ள இருக்கிற thing to a report on the SFS or SCFS. That is in the matters, whether these matters, any of these matters are having any implication in the audit report of SFS or SCFS. Complete FS or complete financial statements or audit report of these matters, are they having any effect in the audit report of SFS or SCFS? Considering whether, so for that, basically considering whether a matter included in the audit report of complete set of financial statements, matter, is it relevant? You have to check whether it is relevant. Is it relevant? That is the matter. Is it relevant to SFS or SCFS? Is it relevant to SCFS or is it relevant to the report of SFS or SCFS? Other audit or professional judgment. Complete set of financial statements, like these matters are there. Is to like whether these matters has any implication on SFS or SCFS. Whether these matters are relevant to audit of SFS or CFS, the auditor or professional judgment. He may decide the relevant implication, everything he will decide. Then there are, for that decision, there are certain factors that may be relevant in considering those implications. In the implications considering, there are some factors that are relevant to consider this implication. What are those factors? Auditor will check these factors and then decide whether these matters has any implications. And first, what is the nature of the matter? Matter or nature described in complete set of financial statements or audit report and the extent to which it is related to SFS. Then what is the pervasiveness of the matter? How huge it is? The nature and extent of differences between the financial reporting frameworks. Complete set of financial statements or a financial reporting framework, what is it? And SFS or SCFS or a financial reporting framework, what is it? Then what is the difference in that? Then extent of difference between the period covered by complete set of financial statements compared to date of SFS or SCFS. The random period difference. And then time elapses since the date of audit report on complete set of financial statements. Auditor will consider these four factors. Then he will decide whether any implications are there because of these matters. Example, you can just read. Then inclusion of a reference in audit report to a complete set of financial statements. Inclusion of a reference to audit report on a complete set of financial statements. Reference kodukkuradhu. See, even when certain matters included in the audit report on complete set of financial statements do not have any implication on SFS, SCFS. Complete set of financial statements, certain matters are there, but they are not having any implication in SFS or SCFS. In the matters, no problem is there. But still in that case, if auditor decides, oh, I have to, like, these matters have some relevance or have something, then auditor can give a reference to of these matters in the audit report of SFS or SCFS. So even when certain matters included in audit report of complete set of financial statements, even though they do not have any implication to SFS or SCFS, still the auditor may refer those matters in other matter paragraph in audit report of SFS or SCFS. It's his wish. For example, material uncertainty, he can give a reference. Simple. Then adverse opinion or disclaimer opinion in audit report of complete set of financial statements. That is complete set of financial statements. Here, if they are having any adverse, that is inside the complete settlement, main financial statements, if there is any adverse or disclaimer, then you cannot issue a modified, like sorry, not modified, unmodified opinion. You cannot issue an unmodified opinion in SFS or SEFS because, bro, adverse or disclaimer means something like is like a huge pervasive impact is there. So you have, so if the complete set of financial statement has an adverse or disclaimer of opinion given by the auditor, then for the SFS or SCFS audit report, you cannot give an unmodified opinion. Okay, that's just common sense, right? So if auditor expresses an adverse or disclaimer of opinion in entity's complete set of financial statements, SS705 does not permit the auditor to include an unmodified opinion on the SFS or SCFS because such unmodified opinion would contradict the adverse opinion or disclaimer of opinion, because common sense. Then if auditor concludes that it is necessary to express an adverse opinion or disclaimer of opinion on complete set of financial statements, that is complete set of financial statements, adverse or disclaimer is there. Okay, but for a separate audit of specific element, not SFS, single financial statements, no, specific element only. So that is complete set of financial statement has an adverse or disclaimer of opinion, and auditor is thinking that the audit of SCFS, specific element, auditor is thinking I should give an unmodified opinion. In that case, included in the audit financial statements, auditor can give an unmodified opinion for SCFS. Like here I told you, if complete set of financial statements is adverse or disclaimer of opinion, you cannot issue an unmodified opinion for SFS or SCFS. That is correct. Yeah, first case. But SFS you cannot issue it anyway. If adverse or disclaimer is there, you cannot issue unmodified for SFS anyway. But if it is SCFS, there is a way that you can issue. That is, even though complete set of financial is adverse or disclaimer in the still for SCFS, there is a way that you can issue an unmodified opinion. What is that? So auditor shall do so only if, that is, auditor concludes necessary to express an adverse opinion on complete settle. Okay, but for a separate audit report, separate audit of specific element, he is thinking to issue unmodified opinion. He can do so only if these three conditions are fulfilled. This can be like a important question. So if these three conditions are fulfilled, then he can issue a unmodified opinion. So auditor is not prohibited by law or regulation from doing so. First of all, he should not be prohibited from law or regulation. Opinion is expressed in auditor's report that is not published together with the audit report containing adverse report. Like it should not be, both should not be published together. I told you like earlier. Then element does not constitute a major portion of entity's complete set of financial statement. That is, this element should not be a major portion of complete entity's financial statement. So done. Yeah. So 800 and 805 is done. So for the next attempt, I think these two are comparatively more important. Then all the other standards, some not all the, like we have touched upon all the major important standards for the next attempt. Then S1 710 or what next 710 and some other standards are there, like few standards which I'll make a video and upload it on my channel so you can see that. But in the next few days I'll do it. My throat is getting only recovered, so that is why a bit delay happened, like around 12 hours delay. Yeah, but still these two are important for the next attempt. That is why I uploaded very quick. Then others I'll upload it in my channel or in THARUN'S Brainery channel, anywhere. Please go and take a visit to it. Yeah, so almost we have covered 95% of standards which are relevant for Jan'26 attempt. Like in just almost, I guess, total compared to last, like in the this one, our live session, we have done almost uh, around 12, 13 hours, nearly 12 and a half hours already we have done. Plus this one is around like 1 hour something, around 13, 14 hours. We have covered all the standards in relevant for Jan'26 exam, except like 710 and one or two few 530 or something, which you told, which takes a lot of time to explain. But I'll make a detailed video about that and I'll explain. I'll put that in my YouTube channel. You can go there and watch. See a Sudarsan, and if you see, you can get it. But just give me 1 or 2 days. Let's let this sink in once. Okay, I'll do it. Yeah, with the questions also I'll do it. And like I said in the class, some important questions I'm just going through some important questions, which I'll make a video about that and I'll upload it there. So please join and be there. All on the Telegram channel, these notes, everything is available. So please uh, be joined there. Whatever videos I upload in YouTube, also I'll share it there. So hope you had a good session on this. We took some detailed time and explained everything line by line, because this one standard I can just simply sit and explain everything with some charts or something. But the problem for me is that, like we do in other chapters, this one chapter may not be because this chapter line by line we need to go. Yeah, this standard S800 and 805 and 810 also. Definitely I'll upload one video on uh, yeah, YouTube. So that is also will be taken care of. So don't worry. All the important standards for Jan 26 we have done and dusted.